I'll tell you the true value to that for a guy like me is options.
Yeah.
You don't like going to your investors and saying, you're my only option. You need to input more money. But when you go and have a conversation, so listen, I've got 3 different options. You guys can invest, I've got the fund, or I've got option C. I can take either which one you want, however you would like to do it. What that builds is a lot of confidence in your ability as the developer to them going, hey, he's actually not just come back begging for money. It's for things that are outside of his control. Because when it's outside of your control, there's only so much you can do. But if we can provide options within our own developments and our deals, that has way more value. You're giving more value to their investment and your interest in protecting their investment.
Yeah. Welcome to the Syndication Show. Today we have special guest Blair Gardner. And Blair, I can't wait to hear more about your story and what you've done in real estate. Before we do so, though, I would love to turn things over to my co-host Kalani and let her share with you a little bit about who we are as PREiShare and some of the tools that we're bringing to the real estate marketplace.
Perfect.
Thanks, Christian. Blair, thanks for being here.
Glad to be here.
I know you don't know much about PREiShare yet, so would love to talk about some of the benefits that we're bringing specifically to real estate syndications.
Okay.
Before I dive into those, though, we all know that there's quite a few frustrations that exist, and I'm sure we'll dive deeper into this within real estate syndications, whether it's lack of transparency between sponsors and investors, whether it's lack of communication, maybe it's late K1s, maybe it's where the actual performance of a deal doesn't match the performas, and so on and so forth. And so through our experience working with PREiShare, but also some of the other partners' experience, whether it's throughout the last 35 years, throughout the last 45 years of being specifically within, working specifically within commercial real estate investing, they too have witnessed those same frustrations. And together we have come together with quite a few different solutions for real estate syndications.
Good.
One of which is our listing hub. It's not quite launched yet, but that listing hub, essentially what investors will be able to do is they will be able to sell their syndicated fractional real estate investments. Okay. So let's just say there's 20 investors in one syndication and one investor needs out for whatever reason. Maybe a family member has some medical bills and they need to liquidate. Well, as we know, it's not easy to liquidate those shares. So our listing hub will give investors an opportunity to be able to liquidate their fractional real estate investments, making those investments more liquid. So in addition to that, we are compiling a list of professionally reviewed sponsors. So what we will be doing is professionally reviewing and looking into sponsors, whether it's looking at their, financial reports, their K1s, their internal and external team, their communication with investors, and so on and so forth, to see how good of a sponsor they actually are. And so what we're doing is we will be compiling a list of essentially good sponsors or great sponsors that we will then give exposure to them, to our accredited investors. Because investors are looking for good sponsors, not just ones that say they're good, but ones that are actually good based on a track record.
And pre-qualified.
So we have the listing hub, we have the sponsors, we have a fund that we're launching too. And we're going to be doing a couple of fun things with the fund. One of which is we're going to be potentially purchasing some of the fractional shares that will be sold on that listing hub. And again, the investors that are selling on that listing hub will have the opportunity to sell to us. Should we make an offer, we'll underwrite the deal, we'll ensure that we think that it's a good deal. And if we think it is, then we will offer them a deal. If not, they can sell it to any other accredited investors that are looking at purchasing their fractional shares. So that's one avenue that we will be using the fund for. Another one will be offering top-off services to other syndicators who are in the final hours of their rates. And they're just short, and let's just say they need, but let's just say it's $100,000. Maybe it's $500,000, where we can come in with our fund and provide top-off services to those sponsors. Something else that we'll be doing is offering preferred equity. So let's just say that the remodeling of a property was more than the sponsor thought. Let's just say it's $200,000 more. Maybe it's $500,000 more. Well, instead of going back to the investors for a capital call, we can step in and provide the capital that's needed so the sponsor does not need to go to the investors and do the capital call. So those are just 3 of the things that we'll be doing with the fund. Well, we have a couple of others, but those are the 3 main ones.
Yeah.
So we have the listing hub.
Got it.
We have the list of sponsors. We have the fund. Something else that we're offering as part of a solution in the marketplace is the Syndication show. On the Syndication show, we're going to be having, people just like you. We'll have other real estate leaders. We'll have other sponsors that are doing great. And other people that can come in and really provide value to our audience of investors and sponsors. And then lastly, we have a community of investors and sponsors that we have created online where investors and sponsors can basically be transparent with one another. They can communicate. They can talk about market trends. They can talk about where they think the market's headed and so on and so forth. So those are some of the benefits and solutions that PREiShare is bringing to the marketplace, and that we're excited to share not only with you at the moment, but those of you that are watching right now. So
absolutely. So as you can tell, we're all about creating community around the space of real estate, and we want to have market intelligence that's available to anybody that's participating with us. And we also want to have people pre-approved to get access to our funds as well as the funds that are out there in the marketplace. Sure. Now, we've talked a little bit about your background in real estate, but I'd love to go all the way back to the very beginning and kind of give us the Reader's Digest, if you will, of how you got into real estate to start with and where you've grown to now.
So you want me to go all the way back when I was born? So I was born in Wyoming. No, just kidding.
Yeah. Did you own that
family? Lots of snow. No. So my history actually started in fitness, and then as that kind of grew and evolved, I've always had a passion for real estate. I've come from a real estate background with my parents. My dad primarily was a contractor, so I grew up on backhoes and track hose, and so I understood kind of the behind the scenes, the moving the shovel type stuff. And then as I kind of evolved, even through education and through how hard do I want to work physically, over time, I'm like, well, there's a smarter way to make money. And so I started in sales, which a lot of real estate folks do. And in sales, it transitioned into owning real estate brokerages. It transitioned into owning home warranty companies, real estate services companies. And in the whole mix of this, I started kind of following, to be honest, I got a little greedy, right? I wanted to see where the money was being made. And so I started following, well, who's making the money? Well, contractors are making money, right? They're building houses, they drive cool trucks, they live in really nice houses. So I'm going to be a builder contractor. So I partnered with general contractors. I was the sales, the negotiation, the acquisition guy. So I built a really big portfolio that way in terms of my network. Then we started having the challenges of building and homeowners and different things. And so I moved into, well, who's really making the money? Well, the land developers are making the money. They seem to, kind of walk away from the deals, or they're making big dollar signs. And so started following the money into land development and really immersed myself into that to get a clear understanding from basically a raw piece of ground to a finished building. And how does that look? And where's the money made in between? And how do I fit? And what piece of pie I get to take? And then as that evolved, as a lot of us did, we got our butts handed to us between 2008, 2012, 14. And I started realizing, well, who's really making the money? And it's the funds, right? It's the lenders. It's the people that are supplying the money. They understand how money works. They understand the loan to value, right? The value of this, and I'm only loan this. Therefore, if I have to take it back, I've got an asset that's really, really strong that I can then either resell, or someone's added value to it at the money we've invested. And now that they've added value, it's worth more. So therefore, we're in a better position. So that's kind of the really, Reader's Digest version of how I got into real estate. So where I currently spend my time is in primarily land development, partially because I just love it. I just love taking a piece of property that either someone's looked at and they don't really know, or they've tried something that's pretty traditional. And I like finding these deals and looking at it in a different way, and then putting more value add to it and creating something that other people can find value down the road. So either tenants or I do a lot of sells, build to sell, build to hold. Now we're working with a lot of flex spaces, which is kind of a combination of office, garage type scenarios, and multifamily. Single family, I've got a significant amount of experience in single family, again, from developing the lots all the way to building the homes. And I've chosen to kind of move a little bit more in the direction of multifamily for a number of different reasons, market specifically. But again, that's kind of where I spend my time now.
I love that concept of follow the money. You're kind of always looking up the line of, okay, I'm making good money, but who's the one that's getting even more? And it's about leverage, right?
Correct. Yeah. Leverage is huge, especially in my industry, right? I mean, because depending on, and this is very relative to the fund and what you guys are trying to accomplish and do, because first and foremost, if you're not networked appropriately in what you're trying to do, you're either going to have struggle finding deals, or when you find the deals, if you're not networked appropriately or with the right type of individuals that have the resources to be able to fund your particular interest or want, it's going to slip, or someone else is going to pick it up who does have that network, who does have the resources to be able to put those packages together. And so my experience with funds and hard money lenders and traditional banks and all these different, there's a place and a play for all of them, right? Otherwise they wouldn't exist. And so depending on where you're at in the deal, where you need funds, the size of the deal, understanding what your parameters are and what your liabilities are. For instance, if you go to a bank, you're going to have to put a significant amount down. So they're more protected. So their risk is low. And therefore, there's a lot of criteria that is required. You go to private money, pretty simple, right? It's fast, furious. They've got a lot of cash. It's very, very expensive. If the deal doesn't go very smooth and it doesn't go the way you wanted it to, you may lose the deal. And all your efforts and time put into that place. Then you go into the bigger deals, right? The big apartment complexes, the big commercials. I mean, mini cities around the entire country. Like, where does that money come from? Well, that's usually a conglomerate of a lot of different funding or money or investors that come into funds as you're doing. But to the little guys or even the medium guys, how do you find that? So your idea or concept of putting the funds and or the resources of where these funds are available with the people that either want to invest within the fund, because let's say they're doctors, dentists, they're in their professions, they just want to make money on their money. And they always want to, everybody's telling them, invest in real estate, invest in real estate. And they really don't know how. Well, this is a way for people to become investors in real estate without actually having to get their hands dirty with a shovel. So I understand all of that, and there's a play and a place for every one of it. It just depends on where you want to put your mix.
Yeah. Well, and I think we're going to be doing something a little bit different in this interview with you, which I think is great in terms of, we talk a lot about like syndications, and we've interviewed multiple people that are syndicators themselves. For you, on the other hand, you've chosen to stay more in the development side of things, at least at this point in your career, and not so much entering into the syndication space. Would love to know kind of why you've chosen not to go the syndication route.
Well, it's not that I haven't chosen the syndication route, it's timing, right? Okay. There's timing on a lot of scales. So my personal resources, I've found that if I can keep my hands on my own projects with my own funds, okay, given the level that I'm at, it just, the math works, it pencils out, right? Because now, as these projects evolve and they grow and there's more money free flowing, my next order of business is to be one of the investors within the syndications, right? Because that's a big part to the next evolution as you talk about following the money. Because once your money's put inside of an appropriate fund in syndication, then your money's working for you without you having to actually get your hands dirty, as I said before. So there's an evolution with everything you're trying to do. There are people right now that have a lot of freestanding money. They don't know how to put it, where to put it. And that would be a great individual that would take advantage of what you guys are trying to offer.
Yeah. And I think that that's really what it comes down to in a lot of cases, is we find that people reach a certain level and their funds aren't enough. And so they start reaching out elsewhere. And sometimes they can do it in a very small manner with just a joint venture or something else. But when it gets to the point where they say, I want to level up, and to everybody, leveling up is different, right? To somebody who's, had a very successful career and owned a lot of businesses, it's a lot easier for you potentially to be able to use your own funds and keep control. Because I think everybody wants to keep control. And so there's that breaking point of, how do I keep as much control as possible, but also go find those outside investors so that I have enough capital to take down deals that are big enough that it's a scale that is going to drastically improve my lifestyle overall.
Absolutely. Well, and you brought up a good point, because, truly getting your hands dirty and having control, like even with me, for my particular deals, there's a certain size level of deal that I don't even touch unless I know I've got a fund or I've got the resources to do it, right? So within this level below, it's like, hey, the funds, based upon how much work and effort has to be put into what I'm trying to do, it makes sense to kind of not include that type of a resource. However, in the next evolution, as you talked about, these different layers, when the fund is involved and you know that you can go to a fund and they've got a significant amount of resources, well, you also look at what the investors are trying to get out of that fund. And the nice part about that scenario is me as the developer, I can go to the fund and say, guys, here's the whole package, right? And the fund can then say, hey, investor, we've got these deals. We got a deal that Blair Gardner just put on our plate. And this is something that we as the fund feel is significant. It's legitimate. We feel the upside is where it needs to be. It's going to get the returns the fund needs. So therefore, we're going to invest in this. So that's very, very important. But it's just a different level of play as you kind of evolve through your whatever real estate interest you have.
Yeah. And it sounds like you're even getting to that level that I think everybody is ultimately trying to move towards, which is now I just want to take the money that I've earned and put it in there where somebody else does the work. Somebody else is getting their hands dirty. Somebody else is dealing with the management. Is that what I'm understanding?
100%, because I like to play.
Yeah.
I love to play. I do a lot of lifestyle stuff. So for me, I don't like to do, I do the day-to-day, I wear a lot of different hats, but of course, man, if I could say, listen, I can make this kind of return by simply being an accredited investor and being qualified enough, have enough of a background knowledge of the fund or wherever I'm putting that money that I trust them with my money. It's, they're legitimate as you guys are qualifying these funds, which actually is more exciting for me because there's a lot of people that can put together a fund and say, yeah, we're awesome and we're getting deals and we're getting great returns, and you can get in trouble. I'm going to say that publicly. Funds can have failed, just like real estate developers have failed, just like agents have failed. So knowing a qualified fund for me, if I've got an extra $100,000, $500,000, $1 million and say, well, instead of putting it into a deal and doing the hard work, I'm going to put it into my fund and I'm going to go to Mexico or I'm going to go to Bahamas. I'm going to let the fund pay for my trip instead of me having to pay for my trip. So there are those elements for sure.
Yeah. And that's one thing that I think is really interesting as we're talking to folks. And, everything is still coming into play, but Kalani can attest to, there's people that we're talking to that have the funds and they're saying, I kind of want to dabble in everything that you guys are doing. I want to put money in the fund that I don't have to worry about and I don't really have to analyze the deals. But I also have some passive investments that I kind of want to just take my limited partnership and sell it on the open marketplace so that I can liquidate some of those things and put it somewhere else. And then they're saying, but at the same time, I want to keep an eye on that marketplace for the good deals that come across. So it's so interesting to be in this space where, we can have all of these different products that seemingly appeal to different demographics. But when people get to a certain level in their career, potentially retirement level of investing, they start saying, I kind of want to play in all of these fields.
Well, and I'll be honest with you, one of the biggest challenges to play in all these fields is there's a significant amount of energy that you got to apply to be able to understand I want to sell, I want to buy, I want to invest. If there's a resource that sounds like you guys have created and very heavily in the process, have created in which I can go into one location and I can say, well, I've got this I want to sell, I've got this I want to invest, I want this I want to buy that'll help build my portfolio. That, as I've said, my success has been in networking. It's not been in development. It's not been in real estate, truly. It's been in networking. And part of that networking is have a centralized hub to say, you have so much information in one location, and then I can just pair. Oh, that guy wants this. Well, I know this guy that wants this, or this girl that wants this, or this business that wants this. And you put them together. Right before this show, guy calls me and says, I want to buy one of your townhomes. I said, well, they're not going to be ready for 18 months. And he goes, well, I need one in the next 3 months. So what did I do? I called my guy in Idaho and said, because I knew he had townhomes, because he and I network and communicate, and put them together on a phone call, and they're closing the deal next week. So when you have that, and I'm the central hub for that deal, it sounds like you guys have the resources to be able to, if I have deals, I can put them in. If there's deals in there, I can buy. If there's money I want to invest, I can put it in there and get a specific amount of return. For me specifically, what really caught my attention is that you're qualifying. If you're doing a lot of that heavy lifting and saying, listen, out of the 1,000 different funds we can look at, we've looked at these 5, or specifically, we've pre-qualified them to where we know they're accredited, they're going to take care of your money, they got a track, a history, a track record. That to me, from a time perspective, saves so much energy so that I can actually put money to work or put time to work.
Okay, we know that there's this need in the marketplace, but from talking to industry leaders, to investors, to accredited investors, to sponsors, to you name it, we're starting to realize more and more needs that exist in the marketplace. And what we're doing is like, okay, we see these needs. How do we create a solution? As we are professionally reviewing our sponsors, we have developed an internal rating system where we will rate each of the sponsors. And then we're going to have that available on the website at some point too.
Yeah, and we have an amazing analyst. This guy started out in securities, worked for a very large corporation there, and then his brother pulled him into the real estate space, and they did over $6.5 billion in real estate syndication. And this was the guy that was analyzing it all. So now he's on our team. Kent is a great man. We are super grateful for him. And so, yeah, he's put together some models to where when we're reviewing these guys, we kind of have an internal rating system, but we're also reserving a certain portion of each sponsor's rating to be based off of investors that have invested with them. So essentially, when you come on there, instead of you coming and saying, hey, tell me which one of these guys are good, we're going to say, well, here's how they stack up. And here's why they stack up where they are, because you might be more, it might be more important to you that they have a long track record, whereas to somebody else, it might just be important that they are, delivering a certain return and a certain yield. And so we want to have it to where it's this place where you, like you said, you don't have to do that heavy lifting for every single deal that you invest in. Instead, you come in and you can see where they stack up compared to everybody else. And then you can, hear about the offerings that may be coming down the line.
So, again, from my perspective of being a developer, that's priceless because time is extremely valuable. Everybody talks about that, but when you're trading time for dollars and you're spending all your time reviewing and is it true? And what does this mean? And I heard this person said one thing. Do I trust them? I mean, you think about if someone who you really trust tells you to go put your money over here, you usually do that first because of that relationship. If you've got that resource in which that rating scale, and I like your concept of being able to identify them differently, meaning, hey, this one has a longer track record. This one has better return. I wouldn't say better returns, but these are the returns that they have. And every investor does have different criteria that's going to trigger or spark them to determine where they're going to invest and how much, right? They might look at one rated company and say, well, geez, that one, it's safe, but so I'll put more money into it. It's safe. This one might be a little bit more aggressive. So it's almost, I hate to say stock market-ish. That's probably, it's relative. Yeah, it's relative. No. But again, that's what you're picking. You could potentially have an aggressive one. You could potentially have something that's got a better, a more history that is more traditional. That to me helps because then if I have a significant amount of money, then I can diversify that money as well within different funds. And they might be in different areas. Some might be commercial, some might be single family, some might be in land, some might be in, in home care. I don't know what, they all invest in, but primarily for what I would be looking for. And my evolution is once I reach the certain financial level that I want to get to, both in passive income out of my specific assets, as well as what my financial, returns are, because I'm not a big stock guy. I'll be the first to admit it because I can't touch it. It's not tangible. Can't feel it. Funds are the kind of that in between, right? I can still touch it and feel it because they're investing in stuff that I can touch and feel.
Yeah. And that's the beautiful part is we're kind of trying to merge that of taking some of the downsides of, the securities realm and bring it over into the real estate realm, or I should say the upsides of the securities realm, bring it over into the real estate realm. So when you talk about that, the liquidity for us, we feel like is a big thing. And that's why a lot of people might have their retirement accounts, held with some company that's investing in something that they have no clue about because they know that if they have to get access to it, they can. And so what we want to do is give that same certainty, but allow them to still be backed by real estate. And then we want to have the syndicators, the people that are putting good deals out there, know that they have access to that for their investors and know they have access to the funds that they need should they come to a challenging spot or a place where they just need to get past the finish line.
So if you don't mind me asking some questions, so is your another avenue when you talk deals, are those deals within existing investors have deals that they want to keep into the fund? Or is it guys like me that can say, hey, here's 5 deals, let's expose the funds. Do the funds want to look at our deals?
So we're mostly late stage. So it would be,
So it's
there's three things. There's going to be when you're raising your funds and you're going out there doing your own raise, you can let people know, by the way, we're already, approved through PREiShare. So if you get to a position where you need your money out faster than the end of this deal, then they're willing to not only allow you to list on the listing hub, but they would be willing to make an offer on your deal.
Got it.
The other thing is if you are doing a raise, you want to bring it to us still, but we're going to be the guys that we're probably a little bit more expensive money on, in just being clear and transparent, but we're going to pre-approve you so that if you get to the end of your raise and you're having those sleepless nights because you don't know where the rest of that money's coming from, if we already said, listen, we'll allocate this much and we're willing to give up to this much for a top off of your deal, suddenly you sleep better. In fact, you probably even go raise more confidently on those final dollars because you're not chasing saying, I need to, make sure my earnest money doesn't get lost, or, I need to make sure that I follow through on my word. You've already got the funds available. It's just about getting you to that finish line.
Yes. And that's that what'd you call it?
Top off services.
Top off services. Yeah. That's huge. I mean, I'm currently in a situation where it might be worth having a conversation relative to that, because this market, with every market change, everybody's very, very confident and money's free flowing. And we just talked about it earlier. And then all of a sudden you got everything secured and done and finalized. And then there's like, let's hold back for a little bit. Let's see if we can extend this contract. And the seller's like, what are you talking about? You said you were going to close it. Are you going to close it? Are you going to get it done? Well, if you don't close it, what's going to happen after the fact? So, and I'm a big guy of, if I'm going to go that far into the deal, I'm going to close it because it makes sense. Yeah. So that's actually a great, great value add for a guy like me.
Right. And then on the other side of that, which is also very prevalent to the market, is you might be in the middle of your deal, but part of your 3-year or 5-year plan is to refinance and get traditional, financing to finance you out. And now that interest rates have done what they've done, you might not get the same loan to value. So now you're going back to those people that originally invested with you and saying, hey, would you be willing to put more money in so we can get this thing closed? Instead of doing that, that's where our preferred equity situation comes in, where same thing, if you've already been pre-approved with us, we can say, listen, we have this amount of money that we would allocate to you based on your fund. And you can go to your investors, still be transparent with them and say, listen, market has shifted. We have a plan. We can go here and get this money, or we could ask you guys to put in more, which in tough times, as you can imagine, people don't want those surprise calls.
Well, and I'll tell you, the true value to that for a guy like me is options. Yeah. You don't like going to your investors and saying, you're my only option. You need to input more money. But when you go and have a conversation, so listen, I've got 3 different options. You guys can invest, I've got the fund, or I've got option C. I can take either which one you want, however you would like to do it. What that builds is a lot of confidence in your ability as the developer to them, going, hey, he's actually not just come back begging for money. It's for things that are outside of his control. Because when it's outside of your control, there's only so much you can do. But if we can provide options within our own developments and our deals, that has way more value. Because then, I shouldn't say it's a takeaway, but essentially you're giving more value to their investment and your interest in protecting their investment.
Yeah. Well, similar to that, so we are currently proactively building relationships with sponsors. So something that is great for sponsors is when they are looking for investors to invest in their syndication, the great part is they can say, hey, we are PREiShare approved. Should you need to liquidate, you can list it on their listing hub in the future.
Yeah.
So it's not like, hey, you're stuck into this deal, say 3 years, 5 years. Like, say you need out at year 1 or year 2. Well, great. Like, list it on the listing hub and see what you can get for it. So.
Well, and again, you guys keep having me add more value because you're telling me more stuff that adds more value. Because in my brain, and I'm a fast thinker and hopefully a slow mover, but the fast thinking behind that is let's take the scenario that I do need to liquidate or I do need to do something different. Open market. Who's the open market? It's not you guys. It's not the fund, right? It's hopefully someone hears about it and they tell someone that eventually might be part of your program. But to be able to, quote unquote, have a listing service that I can say, listen, the people that are going to view this, they're the ones that know what they're looking at. They know if there's value there. They'll move quickly, reasonably quickly, above and beyond any just throwing it out into the open marketplace. Again, another value for me would be that's massive. Like, for instance, a gentleman just called me about, he's got an apartment complex that he wants to liquidate, right? But he doesn't know what the cap value he needs to identify with. Well, if you can help him set that, and then the funds are looking for that type of an opportunity to be able to bring it into their portfolio to be able to provide the return to their investors, that specific hub allocation would make a big difference.
Yeah. And that's where our underwriter, Kent, he'll be underwriting each of these deals that we make an offer on.
Exactly. And
He's
that's
great at it.
I'm sure it's, hey, this doesn't fit the model, so pass. No, these three, we need to look very seriously at those.
Yeah, well, and to add on to a different part of this conversation is you have now the aspect of we have a lot of people within our group that are creating this, that we're not going out there trying to be the syndicator per se, right? Mm-hmm. And many of them are in their later stages of investing. They've spent their they've made their millions, and now they have this list of passive investors that still want to invest. And so with the Syndication show and with our email list, we have an email list of over 40,000 accredited investors that people can tap into, because you may be still in the thick of it. You are still in the thick of it. Right? And so if you're already approved,
in the thin of it. Yeah, still in the thick.
If you're already approved with us and we're bringing you on similar to what we're doing for you right now, pro bono, and you have the opportunity to promote to our passive investors, you may not have to syndicate, or if you do, you already have access to the accredited investors to fund quickly. Because like you said, time is money.
Yeah, absolutely. Absolutely. And again, what do funds need? They need deals. They have to have deals. Syndications, funds, that means nothing unless they can invest into something. So that's why it works hand in hand. And the more deals that your underwriters and can look at, the more opportunities the funds have to be able to create better returns and or spread their wealth, right? Meaning different markets, different industries, different geographical areas, because again, as we're finding right now, I gave an example earlier about a specific market that's went from here and now it's here. Well, there's two markets primarily in the country that either drop the fastest, but they rebound the quickest. Well, do you want to be in that market or do you want to be in something else, right? Do you want to invest and use those funds to buy low in markets that aren't necessarily doing well, but they're going to recover? Well, when you have those deals in front of you, that is what keeps the wheels on.
Yeah. Well, and that reminds me of something else that we will be creating. We're not yet is we will be collecting market intelligence on different asset classes that are performing well across the nation, different geographies and things like that. So as we build this community bigger of both investors and sponsors, we are going to be collecting market intelligence and compiling that and distributing it some way or another to our community. So.
Well, if you watch, even in our particular market here in Utah, where was the shift come? Right? I mean, the shift's gone kind of a little bit more west, a little bit more east, a little bit, Idaho Falls and all these different markets that used to be nobody wanted to be in. And if you have that data and have that information and spread that across the nation, that for a guy like me as well, when I say either I want to go develop, where's the best place? I want to go buy, where's the best place? I want to invest in the fund. Where's the fund looking? Because if I'm an accredited investor and I've got my money in the fund, I don't want to micromanage that money, but I do want to have an understanding of where does that fund like to put their money? Where do they like to see their returns? You talked about track records and return. That's what I would be looking at, which ties back into your rating. It ties back into what market share they're looking for. So all this stuff makes a lot of sense. It's kind of surprising with all the technology and the lifespan of what we've been in that there's not this yet.
Yeah. Well, and that's the whole concept
behind it. Found it.
And I think why, in my opinion, is most of the people that are out there doing deals are focused on getting their deals done and managing those deals. And then most of the people that have money are essentially just trying to figure out, okay, where am I going to place this money? There hasn't been somebody that steps away from it and says, I'm not going to be in the front line of it. We're actually going to be in the late stage of this, and we're going to create those solutions. So this is where most of these ideas came from, is we're going to be late stage. And I'm watching the gears turn in your head as you're thinking about the fund, because we have diversification of what stage we are into the deal. Most of it is going to be late stage, right? So we're going to see our our equity multiples sooner.
Mm-hmm.
We're also going to be diversified as far as geographical location, because we're going to have sponsors from all across the country. We're going to be diversified in sponsors themselves, because you might invest with a certain group and they might be targeting different marketplaces. But if you have the same sponsor, there's risk in that, right? So we're going to be diversified across sponsors. And then the other thing is we're going to be diversified across asset classes. So you're going to have commercial, you're going to have multifamily, you're going to have self-storage, all mixed in. And so that's why I think we have so much interest in the fund before it's even launched. And so now we're kind of in the scramble mode of we need to make sure that we go out there and find a lot of good sponsors who have and need the liquidity that we're going to be offering.
Oh, absolutely. Well, that goes back to the deals, right? I mean, you got to have the deals, you know, in those, that given those asset classes, which is what just triggered when you're saying you can see my wheels churning. That's what I was thinking, asset classes. Because I mean, one of the reasons I'm in real estate is because I can't stay focused. I can go to work and be in the same industry for the rest of my life and never do the same thing on the same day, right? I can go this way and do single family. I can do multifamily. I can do land. I can take a commission. I can, sell something. I can represent someone. I can network. All those different things allow that diversity, which it sounds like you're putting together. And when it comes to tying it and having a resource to where I don't have to go look. And had a phone call this morning. I actually went skiing for a couple runs today. Sorry if anybody, don't tell them what day it is. But guy calls me and same thing. He invested. He had some 1031 exchange money coming out. He calls me and says, well, Blair, where do I put it? Well, maybe, and I don't know how that works. You probably have to get me educated on that. Is 1031 exchange money allowable within a fund? Maybe an unanswered question.
We're still working on that. We're still answering some of those questions of what we can give as far as the tax.
Yeah, because it'd be curious to know, because that's a big part to the real estate industry. It's a massive part to the real estate industry. Back to that story, it's, well, you can invest in my deals, or there's 3 or 4 deals of people that I know of. I'm just one guy, and I only have that big of a circle relative to the overall scheme of things, where a fund with all those different diversities and these different deals that are coming in have a much broader range. And when you talk about asset class, you can go mobile home parks, you can go commercial, passive incomes, you can do long-term plays on land holds, right? When you're talking about your market share, think about your market share in terms of the growth of the population, where it's going. So do you go way down the road and lock up land? And this is a whole different mindset, right? Lock up the land knowing it's going to come in 10, 15, 20. Think about it. You guys are in real estate, right? Knowing what you know now, look 10 years ago. And if you knew what you knew now, so 10 years ago, you knew Park City or Huntsville, wherever that location is, you go, man, why didn't I buy that? Okay, well now just fast forward 10 years. Right now. And you say, my gosh, prices are way high. Interest rates are ridiculous. We've got our blinders on. A lot of people have their blinders on right now. And I kind of laugh at it, but I've also gone through a couple of different markets in which I've got my butt handed to me. But if you look, what would I do 10 years ago today? Now look 10 years in the future and go, where's things going? And in the past, we're like, it's never going to get better. It's so expensive. There's no way this can be sustainable. Well, look at where land is going. Look at where freeways are going. Look at where industries are going. You start looking at that in the forefront based upon your market share and your studies of type of jobs, unemployment, who's paying for high salaries, where are they drawing those people from, where are people moving away from because of specifics that they don't want to deal with anymore. We witnessed that in terms of with COVID, where the big cities, they completely emptied. Well, guess what? They're not filling back up like everybody thought they were. It's coming back. But when you start looking at that in the future and some of your investment opportunities, and these funds have the means and the resources with the right investors to be able to say, yeah, I want to do some more long-term plays, that's the big money. That's the really, really big money. But you got to be patient.
I'm very aligned with you in a lot of those views in looking at the general population and even a lot of people in the investing world. It's like they can't see things going where they're going in the future, but they can look backwards and they can say, my grandma spent $3,000 for a house, and my mom spent $30,000 for a house, and I, had to spend $300,000 for my first house. But there's no way that this $600,000 house is going to be $1 million in 10 years. And the fact of the matter is, it's going to keep growing. It's going to keep going in that direction. So you might as well position yourself now, right?
Absolutely. And it sounds like you guys have the ideas and creativity to be able to put a kind of a one-stop hub to put that together.
I would love for you to both, let Christian and I know, but also our audience, what are some of the biggest lessons you've learned in real estate? It doesn't necessarily have to be in development, right? But some of your biggest lessons since you've been in the industry.
Probably the biggest lesson for me is patience. I'm not a patient guy, but you've got to have patience, right? The way you analyze what you're looking at, you have to be rock solid on your analysis, right? Because you can get very excited about a deal, very excited about what you're told, very excited about the possibility, the speculation, right? Spec homes, speculative ground. You got to be, so that analysis has to be solid as you can get it, right? Given what you know today, what you anticipate in the future, probably the biggest thing that I've learned. Because I was very much in the old days where, nothing's going to go wrong. This is going to go on forever. So the analysis is number 2. But the biggest thing that I learned is act quickly. Remember I told you I think fast and act slow? Okay, I'm just basically, that's counterintuitive in this conversation, because once you have that slow thinking, that analytics, that patience, when it's time to act, you act. You don't second guess. You've got the information in front of you. Actually, you have to act. And even if you make a mistake, you have to have, this is probably the 4th element to it, is your exit strategies. What are your exit strategies from the beginning? Whenever I look at a piece of property or an opportunity, it's where are my exit strategies? If there's only one, I'm out. I don't care how sexy it looks. I'm out. But if I can see 4 or 5, 6, 7 exit strategies at different stages, then yeah. And every time I get to one of those crossroads, I determine what's my exit strategy. Part of exit strategy is okay, what if I sell this property today? I wanted to take it all the way to vertical, but it's worth enough money for me to move on. Where do I apply that? So then you step back into your patience, your analytics. Then when you have all that detail, then you act. So those would be probably the top 4 fast and furious lessons that I've learned, that I've made many, many mistakes by not doing that.
Those are good lessons. Where are you the one analyzing the deals, or do you analyze them, and do you have a couple go-to people that you go to when you're analyzing deals?
Always.
Always?
I mean, if I just looked in the mirror and talked to that guy every time, he would, I would be out on the street for sure. But I talk to him a lot, many times over. And then I try to go through as many scenarios as I can. And then I bring in the people that are going to be affected by it, right? Whether it's a lender partner. Hey, what do you think? Whether it's an end buyer, right? What's the market look like? I also talk to, obviously, in my world, I've been fortunate enough to have some really, really great mentors and say, hey guys, here's the deal. In fact, on the drive here, I made a phone call because I've been going back. I've been analyzing 2 different scenarios on the flex space and storage. Do I duplicate a flex space or do I create storage space? And I said, we can combine the properties or I can keep them separate just in case I ever wanted to sell. And so I get feedback, and I'm very transparent because you have to be. Because if you're not transparent with the people that you trust or the people that you're going to rely on their information, they're not going to give you accurate information because they don't have all the details. So yes, I have and every deal's different and every group's different in terms of who I call, what market it's at. I definitely use a lot of the real estate resources from commercial real estate brokers, try to get as much data as I can, vacancies, what is the buyer demand, what's the absorptions, all those different factors as much as I possibly can. And once I have that, then it's like, okay, let's go, let's do it.
Okay.
Or let's walk from this one and let someone else.
Let's pass. Yeah. Where are you finding most of your deals? Do most of them, are you approached from someone or companies? Are you out actively looking for deals? How at this point? I mean, because you're traveling, you're up on the slopes, you're, I don't know, paddle boarding, you're doing all the things.
I've got more deals playing, believe it or not. I've got more deals playing, networking while playing. At least I try to tell myself that to keep me playing. It's worked so far, but no, I look everywhere. I mean, the network, the research, when people know what you do, they like to bring you stuff, right? And when I know what other people want, I recognize it and say, well, these builders or these, maybe I don't want to develop this ground because I'm not doing single family, but I know these 10 builders that I've got direct relationship with, and that's exactly what they're looking for. And I pass it on. That's how I'll do it. And then I like looking at specific industries, right? Right now, I want passive. So I want mobile home parks. I want storage units, just like nobody else wants that stuff right now. So that's the nice part, is I'm the only guy that wants, storage unit facilities. I'm being sarcastic, by the way. Everybody wants them, which means they're very hard to find. So when I determine what it is that I want in terms of a revenue goal, then I'll go find it. The deals that I currently have underway, I went and searched very hard for a geographic location that I want to spend a lot of time in. So that's one of the ways that I look. I also look within the areas that I've developed before, because I've got relationships with the city council members and the city engineers. And so when you have relationships with those folks, they like to work with you, and deals seem to go a little smoother, not always, but a little smoother. And then again, it's just network. This is what I'm looking for. If you hear of it, give me a holler back. And over the years that I've been in it, and that's a lot of my intention. I'm not afraid to ask anybody, hey, you know any deals going on? What are you looking for? What can I help you find is typically what usually starts the conversation. Not give me what you've got. It's here's what I have. Maybe it'll help you. That back to lessons learned, you give way more than you get, and then eventually you're getting way more than you can handle.
Makes a ton of sense. And I love some of the things that you tied into. In fact, I think it was Napoleon Hill that said, successful people are fast to make a decision, but very slow to change that decision, versus unsuccessful people are very slow to make a decision, but very quick to change it, right? And I think that's what you're talking about, is once you have that information, you got to be fast. You got to act. You have everything in front of you, act. But then you don't want to be jumping around, right? Because people are going to trust you if you follow through on the things that you say you're going to do. But as we've talked about before, some things are a little bit out of your control. Mm-hmm. I wonder if you could share with us maybe one of your biggest pivots that you're most proud of, if there is one that comes to mind.
See, there's so many that I've just knocked it out of the park. Just kidding. To be honest with you, my first deal in real estate, got it as a real estate agent. It's the most memorable. I wouldn't say it's by no means the most successful, and this is what got me to truly realize what I enjoy about this industry, is I got my real estate license, and they're like, I think it was Mansell. Remember Mansell? They still, yeah. Anyway, and they said, well, just go get on the phones. I'm like, what am I supposed to say? I have no freaking idea what I'm supposed to say. So very frustrated, very discouraged, didn't know what to do. So I started to just go driving around. So I went driving around, and I drove through a mobile home park, and there's a for sale by owner sign. So I'm like, okay, I'm supposed to go talk to for sale by owners. That's what I'm supposed to do as a real estate agent. And everybody said, don't talk to mobile home park owners anyway, because they're just a waste of time. And I'm like, no, I'm going to do it. So I knocked on the door, and I've always had an ability to communicate with, just be friendly, just talk to people. I'm not afraid to talk to people. So I knocked on the door. What are you interested in? You're interested in selling? And it was just a nice couple, and they needed to get out of the mobile home. And I said, well, if you don't mind, let me list it. And so I listed the property. It was my first listing. I then brought a buyer, and the buyer needed to basically have a 6-month seller finance on a mobile home. And the seller's like, no way. We don't trust them. They're crooks. We're not going to do this. And I'm like, wait a second. Here's an opportunity. And so I said, well, listen, if they're willing to pay a seller finance price, which is higher than the list price, okay, that was the big caveat. The seller's willing to take a lower price if they just get cashed out today. So I'm like, all right. So I can't even remember who I went to. Maybe it was mom and dad. Can't remember where I got the money back then. So I said, listen, if you'll invest with me, I'm going to buy it at this. I'm going to seller finance this to this buyer. And in 6 months, they're going to pay me out the difference. It worked. And it worked so smoothly that I tried to do it over and over and over and again. And I wasn't successful because I got greedy and I got excited. And I thought, but that was probably the most memorable one. And I've done most of the deals that I remember are the ones that went really, really south, out of my control. I mean, developing lots in Wyoming, for $60,000 a lot, turning down sale prices at $85,000 to $90,000 a lot, having to sell those lots for $15,000 a lot and bring in the difference. I got plenty of those.
That's a good lesson.
But was it out of my control? It was market driven, right? And then there was a little bit of greed there that I've learned that greed, as we talked about earlier today, you can't go wrong making a profit. Just be careful about, holding on for too much profit.
Yeah. And if you can just create those win-win scenarios, that's where I've seen you build that name for yourself. You build people that are going to come back. And I love how you structured that, because you said, I know that they just want cash and they're willing to take a lower amount. And these guys just need a little bit of time, so I can get the higher amount and make that spread in the difference.
Yeah. Yeah. And that's the nice part about real estate. And it really ties to my creative mind, and it ties to my ability to be able to network with people. And as you said, win-win. I mean, it's kind of it's used quite often, but when you'll walk away from a deal because either you're winning and they're losing, that's when you build some significant relevance and significant integrity in the market and in the industry, right? And that's when people start bringing you deals. Going, Blair's at least going to tell us straight up. I walked away from a deal. I lost a deal because I was not too honest, but I was honest. And I says, you need to take this other deal because it's better than mine. I'm not going to try to talk you into getting under contract for me, and then I'm going to no, you need to take this deal. Well, she's called me, this seller, she's called me 3 different times with referrals, and I didn't even buy her property. So when you start truly understanding and applying that into your daily life, I've got a couple of really great real estate, I think, common interest of a commercial agent that really professes that. Just like, if it doesn't work for everybody, it's not going to work for anybody.
Yeah.
So that's big.
Yeah. What's more important to you, and this is almost a rhetorical question, just the money or the integrity?
Well, I've been in the business for I hate to age myself, but I've been in the business long enough to know that I wouldn't be in the business if I didn't have integrity on my side. You just can't last. There's plenty of people that I know, you guys know, I'm sure, that there's still people looking for them and would, hurt them badly because they can't show their faces because they went for the money and it wasn't for the integrity.
Yeah. And that's the difference of being transactional based, being relationship based, right? Because you can create win-wins. In fact, the best real estate deals I've ever seen is where all parties are coming towards a common goal, right? Mm-hmm. And all of their interests are different, but they have to come towards that common goal. And if it ever comes to that point where somebody doesn't feel like they're getting their goal met, then it isn't a good deal, even if it closes.
Absolutely. Absolutely. Well, and that's the nice part about what you guys are trying to do with what you're trying to accomplish is you're trying to add value and service into something, as you said, as an unmet need. And as you dive deeper, you find that there's so many unmet needs within a space that's existed for years and years, decades and centuries. Well, why not provide that value, bring the right people in the right space, and everybody will win, right? Because part of winning is understanding and being very transparent, right? I'm fine walking away as long as I have everything in front of me. That's number one. Number two is the communication. You guys talked about how valuable you put in terms of communication between the fund and the syndicators and or the investors and whoever's bringing the deal, right? What I found is you can keep the level of negative intensity at such a low, even on a deal that's going south and upside down, but just by communicating. Hey, I'm sorry, I can't get this thing closed. I apologize, I'm trying my hardest. That's option one. Option two would be, I'm not even gonna call them because I don't have any good news to tell them. Well, what is that other person doing? They're flipping their mind. They're calling you bad names and they're going, well, you're a jerk, whatever. But if you can just communicate and say, listen, I'm sorry, I'm not gonna get this deal done. The market, all these different factors come into play. Well, at least they understand. He'll tell me what's going on. The unknown is far worse than the known in my experience in this business.
Agreed. And I think that's usually when something turns towards the litigation side, is when communication is severed at some point. Because with open communication, usually you can work through some sort of a solution.
Always.
And without communication, you can only consider it's most likely ill intention on the other side. Right?
100%. Well, and I hate to say this is even a brag, but I've never gone to court. Never gone to court. I've gone to mediation. I've had to settle and be settled with on both sides. We accidentally built a house. Me and my general contractor business partner, went out of town, and our superintendent measured, we had 2 lots, and he measured the homes in the wrong spot. So now we have one home that is in the wrong, I apologize, we didn't own the second lot. We only owned the first lot. So, but it was an empty lot on the other side. Someone else owned it. We built the house. We got to shingles before anybody said, do you realize you're on my property? And they could have sued us, but we just communicated with them. We educated them. We apologized. There was a little bit of, they got a little nasty in the middle, and we, again, recommunicated and said, this isn't going to go anywhere good if we have to go that route. So let's make a win. And so we bought the house back, and we fixed it, and we resold it. Not fixed it, but we built it, finished it, and we resold it. And I think we still lost, but we didn't lose near what we would have if we would have gone down the really negative path. But it was all because of how we communicated with those folks.
And you learned a lesson. It's part of the tuition.
Oh man, my education is more expensive than any of the highest degree you could ever get in this world, for sure. But it's worth it.
Yeah. So there's a couple things I would still like to discuss, Christian, and I'm not sure if you want to. A couple of directions I would like to go.
Okay.
Is learning a little bit more about how you network. I have an idea, and it seems to be a little bit different than some of the other people that we've interviewed. So I'd love to dive into that a little bit, and even how you've built your business and your work life around your lifestyle, not vice versa.
What I've found is that the people that have my common interests have interests in the industry that I'm in as well. When I say common interest, meaning my play interest, right? Ski, bike, hike, climb. I kind of like to be a renaissance, not really good at one thing, but be able to do a lot of different things. And so what I found through the years is they're financial advisors that we like to go skiing. Like we're going to Canada to go skiing, and there's 12 of us, and all 12 of those individuals either have a reasonably healthy network or net worth. They've got other resources and networks that they work with that love to, hey, Blair's a good guy. Go skiing with him. He's awesome. He'll communicate with you. You need to talk to him about this deal. Do I do it primarily to go skiing to Canada to get business? No. But what I do is I make sure that anybody that I communicate with knows what I do. But again, I first ask, well, what do you do? And man, well, how can I help you? And who do you know that I might be able to put you with to help better your business? And that, for whatever reason, in my world, has just expanded my network immensely. Flying airplanes. I love to fly airplanes, and the guys within my group that I fly in, they know people that know people that know people that know people, and they're always looking for opportunities. And you can't always meet their expectations, but at least now you're known. And, you talked about a 40,000 member email list. I keep track of everybody and who I know and how I know them, right? And how you know someone is much better than if you know them, right? Meaning you can have a very high net worth individual, but you know them, but you can't go to them and talk to them about business or ask them for money, or I should say ask them for money, but provide an opportunity that they could invest their money. So I always want to be very, very direct and specific about how I know that individual, right? Can I provide value? So that's where I do a lot of my networking. Do I go to the BNIs? Of course, but I don't go to every single week, because to me, it's like, I've met them, I know them, they're great, they're awesome. Let's expand. You want to go play? I want to go play. That's usually what I bring to the table. It's like, okay, let's talk business. Let's go play first. And then that's kind of my cultural element, right? There's many cultures that you have to build a relationship first before you talk business. We, as typical Americans, we want to do business first. I like the cultural element of like, let's see if we have something in common. Let's see if we want to work together before the deals are exposed. Being in the fitness industry, so I was a personal trainer. I was a spin instructor for 20 years. I liked knowing about people. And when I got to know them, they got to know me. And when I got to understand all of their devils, that they're dealing with, both mentally and physically, it really engaged me in trying to understand about how people tick and the psychology behind why they do what they do. And so then it helped me navigate. But part of that is when people know you truly, sincerely care about their well-being, that kind of grows and that gets larger and larger. Some may say jack of all trades, master of none is, you're never going to be successful because you can't just focus on one thing. That has been such a blessing for me because it has exposed me to so many different elements. I mean, the largest fitness company in the country, or in the world for that matter, I was in the fitness world and did a lot of trade shows and did a lot of fitness representation behind that, which exposed me to a huge number of people. I worked in the fitness industry, which in the gyms where a lot of people that network they go to the gym. So I kept track of a lot of those people and how I knew them. And then when I got into real estate, it expanded from there. Ski, bike, hike, as my lifestyle. And then my lifestyle is contagious to a lot of folks, right? Because this is going to your second question. I don't believe we get a second chance at life. You might correct me if I'm wrong. I think we're only here once, personally. So why not do everything you want to do when you want to do it, right? Within measure, meaning you're not jeopardizing relationships and you're not abusing people. But in doing that, there has been attraction to people coming my way going, Blair, how do I do what you do? And I'm like, all you have to do is just do, right? I'm not special. I'm not full of money like a lot of people are. I just do what I do and I enjoy it. I don't feel guilty about it. And by creating a lifestyle that really gives you peace and harmony, I find that my work and my business seems to complement that. And I seem to attract those that want to be and have the same thing. And right now, I have a coaching program, but a lot of the clients that come through there are like, well, I'm working my butt off. I'm making a grundle of money. I'm miserable. I'm not doing what you're doing. How do you do what you do? And so we talk about basically by putting so much effort and energy into this one thing. In fact, I just heard a story the other day of a multi-billionaire that basically lost everything. But he also spent no time with his family, spent no time with himself personally. His health is gone. And so what's the money worth? The money's only worth to me what your lifestyle creates and the relationships that you build. So as that has evolved, it's been very natural. It's not been forced. It's not been, I want to be this person. I just happen to be this person. My parents asked me where I came from because my brothers and sister, they're great people, but they're not that way. They're not as outgoing, so to speak, as I am. But in that respect, that has what's helped me build my network, and it's what's helped me create a lifestyle in which I could die tomorrow and I'd be smiling wherever I end up. I don't know. But the people that I've left behind would be like, man, he lived. Yeah. He lived the way we want to, or he lived the way that he wanted to. So that's the legacy that I want to live, because I don't get to decide what your intention is from what I do and what I say. You get to decide what that is. I just hope it's positive.
So I would love some insights we get a lot of different demographics in here, right? Mm-hmm. Let's start with those people that are newer to real estate. They want to get into real estate because of the lifestyle, but what are some of the things that they should be thinking, like forward thinking, to live the kind of lifestyle you're thinking about?
Well, it's their lifestyle, right? They have to determine first and foremost what they want, right? And part of it, and I love social media and hate it at the same time, but there's so much comparing. Well, that person's got to figure it out and I suck, right? They've got a lifestyle that I want. Well, how do I get it? Well, a lot of people need to step back and say, what is it that I really want? Where do I get fulfillment? And where do I get harmony? And that might be, for me, it's flying airplanes. For me, it's skiing. For me, it's being in nature and in the country, or in the backcountry, in the mountains. For other people, it might not be. It might be sitting, and meditating. It might be creating something, artistically. It might be whatever that is. So that's what I really try to help them nail down, just not complicated. We talk about smoke, a lot of smoke in the air. Well, where's the fire? Get to the fire, get to the coals, get to where it's warm, and identify what that harmony is. Once you know what that is, and it's yours, it's nobody else's, it's not something you want to be, you think you should be, all those different things that we get caught up in. Once you find out where that harmony is, then you start applying, well, how do I create that? Or how do I accentuate that in a way that my business and my family and my relationships complement this? Because we so many times sacrifice our fulfillment, sacrifice our harmonies because of what we think we should for others, what we think where we should be, where we think we should be. But so once you've identified what those core issues are, and you can break them down, and it's really simple. It's physical, right? It's mental. You can take those top two and just forget the rest for a minute. Because if you're not physically healthy, what did Steve Jobs say when he was on his deathbed? He could buy the world. And what was his number one wish? His health. Well, how many people sacrifice their health for work, for other things? Whether it's nutrition, so you start stripping all that down into a physical and mental state. in which I want to build a business to be able to support that. How do I do that? So when you talk in real estate, it's what stress am I willing to apply into this business? Because everything is stress related, right? Positive or negative, vibrations, different things. And does that stress create this harmonious lifestyle, or does it take it away from it? And or does that stress, am I willing to absorb that stress for a minute because it's going to get me over here? Case in point, you want to go buy an investment property that then creates a passive income so that you can go skiing more often. Well, there's going to be a sacrifice at the beginning. You're going to have to go sell something. You're going to have to make money somewhere. You're going to have to buy something somewhere. You're going to have to get a credit score. All those different factors. But the ultimate goal is, once I do that, it's going to create this passivity, or it's going to create that harmonious element. So that's the biggest part to me. The other part of it is I don't wait. These people, I love them to death. Oh, I'll wait till I make this money. I'll wait till I have this. I'll wait.
I'll wait to be happy when.
I'll wait to be happy when. That's a huge one.
I'll wait to play when.
I'll wait to play, yeah. What do you find when you work 25, 30, 40 years, whatever, at a specific industry? You go, well, I got enough money to go play, and you haven't created a play mentality. Mm-hmm. You break down. Physically, you break down, and you haven't created a play mentality. But what if you created a play mentality the entire time? Because you can. It's not hard. It's just, you got to decide, and it's got to be discipline. I mean, you truly have to convince yourself to treat yourself well. And when you figure that out and go, I mean, self-care, my self-care, probably a little too excessive, meaning I do it like in the morning, I get up, I roll out of bed. I don't stand up.
You roll onto the floor?
I roll onto the floor.
Do you have a mat down there?
No.
You just hit the ground.
I literally roll onto the floor and I do push-ups. I do 5 if I feel terrible. I do 50 if I feel good. Right? I get blood flowing and I'll stretch. And I mean, I don't turn music on, nothing. That's what I do. And then I'll kneel and make the bed. Don't even stand up yet. I haven't stood up yet, and I'll make the bed. For some reason, there was something that was said, if you want to be successful, make your bed. Yeah, I've heard that before. For whatever reason, that impacted me. So I make my bed. That's how I start my day. That's my self-care, right? Is there times when I get back up and I walk into the couch and I turn on the TV and I go back to sleep for 2 hours? Yeah, there is. I admit it. But I don't let that I don't beat myself up for that too. I'm like, you know what? I must have needed it today. I can't duplicate it because it doesn't help me get into that harmonious state. And then I go about my day, and it's scattered and it's all over, and I'm disorganized. And so I have assistants to take care of all the other stuff. And then I get to be creative. And then I went skiing this morning. I went for 2 hours. I probably shouldn't have. I should have made more phone calls, talked to more people. The snow's good. The sun's shining. Got some great photos if you want to see it, but that's what I do. And then I went and worked my butt off, and I've been out in the parking lot waiting for this syndication show or this little deal. And I was out there for about 2 hours, making phone calls and doing what I needed to do to feel good about finishing out the day. And then I get to be here. And then I get to go home after this and watch some TV and
do whatever you want.
And
I just make it happen.
I love what you talked about, because you mentioned harmony, right? So many people are focused on balance, and I don't know that there's balance in anything but the harmony within it. And you also had mentioned that, or at least I felt like you were alluding to, so many people focus on things that they want, but don't focus on who they want to be. And when you know who you want to be, which is what it sounds like, you already know how to show up, right? Because who Blair Gardner is, rolls out of bed and does push-ups and makes the bed, and he plays when it feels right, and he, works when he needs to fit it in, and he just gets it done.
Yeah. Well, we actually had a conversation shortly, quite a while ago, about harmony and balance. I don't believe in balance at all. Not even close, right? I mean, because you try to balance whatever you're trying to balance and you hold it in that spot for your entire life. Well, there's times in life when you've got to be very work oriented, right? Well, you can be in a harmonious state and very heavily involved in work. I mean, there's 24 hours in a day, and you got to put 20 into work and 3 into family and 1 into sleep. Well, that's not balanced, but can you be harmonious? Well, the harmonious part of it is, I'm doing this for a purpose. I'm doing this for an end goal, or I'm doing this to, do better for my family or do better for myself. Now, do you want to stay in that state? No. Well, then you have to create a plan to get out of that work state, because you can be just as heavily off balanced or out of harmony in a play state, right? You're playing too much. You're not making enough money. You're spending all your money. You've bought too much stuff. It's creating more stress. I got a garage full of toys. Guess what? I don't own anything that I don't use. Not one, right? And the things that I do buy, if I don't get a harmonious state out of it, a fulfillment out of it, it's gone. I don't care. It doesn't matter. But again, I had to learn that mindset because I was I got to have everything guy, for sure. And when you have everything, you kind of end up, I don't want it. It's too hard. There's too much work. So everything I have, it's to give me, I have a ski boat. My son is a professional wake surfer. The fulfillment that I get out of that far exceeds any expense. Dumbest thing to buy in the world. Buying a boat, out of your mind. Stupidest thing, expensive. It's expensive to operate, expensive to buy, but you cannot create those memories and those moments, for me anyway. So I'll go broke on a ski boat for sure until they don't want to do it anymore. And as soon as they don't, it's gone. Yeah. And it truly can be that simple if we let it.
Right. So now let's go to the other demographic that maybe they're not brand new and they're not able to forward look. Now they're looking backwards and saying, man, I've gotten myself so deep into this and maybe I'm producing at a certain level, but I feel the pressure of continuing to produce. How do they start working into having the lifestyle?
Well, part of being deep into something is do you want to be there, right? Because I know a lot of very successful people by production and or money that are so deep and involved in what they've got that they're so afraid that if they stop doing what they're doing and they're not the number one on the totem pole, or they don't have the money that they used to have and they don't have the status, that's a whole different mindset that they've got to get out of, or I shouldn't say get out of. They've got to understand why they're where they're at first before they're ever going to move. And with a lot of folks that I've talked to in that realm, it's like, keep doing what you're doing. Work yourself into an early grave, for sure. But that's the only place you're going to get, for sure.
That's their identity.
Identity,
oftentimes people aren't ready to shift their identity because their identity is all that they know and they're holding on to it so tightly.
100%. My identity, self-admittedly, is physical. I was a personal trainer. I was always fit. I was always in shape. I've done every ironman triathlon you could ever think of, Tough Mudders. That was my identity. Well, I lost that identity when I wasn't in as good a shape as I wanted to be. And so I had to remind myself where the value of my physical self was. And then when I got my physical self back and it's always a progression, don't get me wrong. I'm not where I want to be, but that identity is massively important. And then the identity of who's looking at you. Because if you look at you in the mirror and go, do I really want to, be this stockbroker or be this high producer real estate agent or be this human being? Why am I doing that? Well, very few spend the time to truly understand what that looks like because they're so deep into it that they just continue. The truly harmonious folks that I've met is you hear the people that they've made their fortune in corporate or not made their fortune at all, but it just was absolutely killing them. And now they're whitewater raft guides somewhere in the middle of nowhere. So they've changed their identity. But again, that's a very internal, that's a deep for some people. But again, when it comes down to how do you fix it or how do they change? First, it's identifying what it is that they want. Where do they find harmony? Because if all of that stress, there's no harmony in it, go find your harmony. And if your harmony is fly fishing, well, do you need to make $10 million to go fly fish? No, you don't. You just need to be able to afford to go fly fish. And you might have to give up that part of it. And when you truly do that, what's interesting is they don't miss it if they truly commit to it. But again, it's individual.
Yeah. Not to go too deep into this, and I'll just say this and that's it, but some of the best advice someone told me is, Kalani, look in the mirror and ask yourself if you're happy, because that person won't lie to you.
Really?
Yeah.
So the interesting part about that is most people, when they look in the mirror, they won't stare in their own eyes. They look away first. If you're looking away from yourself, you're not going to give yourself the straight answer. But try to look in the mirror and just stare at yourself. Just deep in your eyes. Because that's the only person that gets affected. I've got kids. I've got I've got a nurse daughter, I've got a vet tech daughter, I've got 2 kids in high school. And, the one thing that I could teach them is self-confidence. Oh my gosh, just self-confidence and self-independence. There's so much that they can manage and handle with just that. But if you can't look at yourself in the mirror, then you got a self-confidence issue or a guilt issue of whatever level it is. But that right there is massively important because you're the only person there, and then you can take that again. We could get deep. We don't want to do that. Yeah, but my point being is relative to truly being in a harmonious state in what I do, is I have to have both. And sometimes I'll work an hour a day, but it's the most productive hour of my day. Meaning, people work 8 hours a day and they are productive in 30 minutes or an hour, right? They're punching a clock, they're doing whatever. But if you truly said, I'm going to do dedicated, when I'm working, I am working. Shut the phone off, no distractions, make your phone calls, talk to your people, get your work done, whatever that is. And then when it's done, reward yourself. Get up, play, breathe, stretch, go for a walk, do whatever you need to do, and then go back for another hour or 20 minutes. I hear all these people, and there's thousands of people, and hundreds of millions of dollars being spent. What new information have you learned in the last 10 years to change your life? You really haven't. It's just a repeat, and it's the basics. It's the basic stuff, but it's where you hear it and how it's impacted you. Like me making the bed. My mom told me to make the bed till I was out of the house, and I hate it. No way, I'm not making a freaking bed. Some total stranger on the internet that I saw, he was a military someone that says, you want to be successful? Make your bed. Okay, I'm going to make my bed. We don't know where we're going to get our impact from, so that's why we keep creating, we keep telling.
So 2 things.
Sure.
And we've still got a little bit more time here for you to be able to answer them, so slow down with it. Where do you see yourself going in the next 2 to 5 years? And how do people get a hold of you if they want to interact with you immediately?
I appreciate that. So what is your definition of retirement? Let me ask you a question. Yes, I'm going to ask you a question back.
So I don't know that there's such a thing as retirement, to be honest with you.
Okay.
Most of the people that I've met that have been successful that tried to retire continue to get back into it because they love it, right? So I like the idea of pre-retirement a lot better.
Pre-retirement, I like it. All right. So here's my definition of retirement to help answer one of your questions.
Yeah.
So it's choosing to work and not having to work, right? So where am I going? I'm very close to the point where I can just choose to work and not have to work. I do have additional aspirations in terms of my passive income to be able to support a lifestyle that I can maintain both for myself as well as my family. So I have those personal goals that I haven't met yet. And so, part of that's the diversity, part of it is just timing and different things, but that's where I want to go. And truly, if someone looked at me, they'd say, well, geez, Blair, you're retired right now, or you're doing everything that you want to do. And so at this stage in the game, I'm there. All I'm doing is now staying in this state and not anxiously going, man, I got to do more. That guy, this girl, this person, I need to do what they're doing. I just stay out of that zone as much as I possibly can. And so I'm just going to continue with my goals for me and my family. I want to be able to take my family places and stay for 3 months if they want to go. Well, I got to sacrifice some things to get there, but we're close. We're close.
All right. And who would you most like to interact with in the near future, and how do they get a hold of you?
For me, I just like people. I just like networking with people. I mean, the fun, this Ken, your analyst guy, love to meet that guy.
Okay. He's in Idaho, so he'll be down.
Oh, he is?
He'll be down in January.
What part of Idaho? Well,
right in your area.
Okay. Well, I'm going to go. I'll go up to him.
Just fly to him.
I'll fly
Land in his backyard.
I probably could.
You could.
Yeah.
If he'll let me.
He's got a big enough field for it.
We'll talk about that. But those type of people, far, far brilliant, different minds, that's who I want to interact with. For sure. As far as getting a hold of me, I'm easy to find on social media. Blair Gardner Coaching is one of my areas. UtahLandGuys.com is really the easiest and quickest way you can get a hold of me. And I love talking about real estate. I love talking about lifestyle and applying a lot of the physical fitness and health related elements into a lot of the things that I do. So yeah, anybody that wants to get a hold of me, that's best way to get hold of me.
All right.
You guys have been awesome.
Thanks for
Hopefully I don't
joining
get too
us.
talkative. Like,
This was great.
You've been great.
I get excited for sure when the lights are on and people are asking me questions.
This is a good thing. And thanks for joining us, everybody. Accredited investors only.